What's going on, everybody? It's Kevin here from Stock Hours, and today I'm going to be going over every single thing you need to check off the list before you take an entry for a momentum breakout scalp. Alright guys, so as you can see, the entry criteria checklist consists of 5 different things. First one being market divergence, momentum, level 2, times in sales, and volume. You want to be making sure that every single thing on this list is checked off before you take an entry for the breakout. So what I'm going to do right here is I'm going to go over some examples live on the charts in order to show you what a perfect entry that matches all of these criterias looks like. So the first one being market divergence. Alright, so on the left over here I have NQ, which is the NASDAQ. On the right over here I have a technology stock known as Meta. So let's just say you wanted to play the upside of Meta at 590. Now, before we get into this trade, momentum has already been checked off of the list. This is an opening play. I'm just going to say that beforehand. So there is going to be a lot of volatility behind this play. But the main factor here that we're paying attention to is market divergence. So let's just play the first candle of the day. All right. So look how NQ, I know this isn't technically live action, but this is the best I'm going to be able to do for you guys. But look how NQ has a big red candle, and you saw earlier how Meta flipped from red to green. This is showing us that the buyers have overcome the selling pressure, and it's going to give us more direction towards the upside. This is market divergence because while the market had a red candle, Meta actually had a green candle. So if we keep playing this back, you'll see that as the market keeps dumping towards the downside, Meta keeps pushing up. So if you caught this trade, it was well over 10%. Beautiful opening play, beautiful scalp. You know, if you took this, it would have been a great trade, right? So that's one of the things in terms of market divergence that you want to pay attention to. Is the stock stronger than the overall market? Is the stock weaker than the overall market, right? Those are the two key factors of market divergence that we pay attention to. Right, so we have this checked off. So let's go over momentum really quickly. So it's hard to show you what momentum really looks like on the chart, especially after everything has been closed down. But when it comes to momentum, you're really looking at the velocity and the way the candle's moving. Right, so let's just say I'm taking Meta on the upside again, 590. When we see the candle approach to our key level, which is 590, we don't want to see it make small green candles like this. This is a lack of momentum, which can lead to a false breakout and immediately reject back down. Right? So the best way to do this in terms of reading momentum is you want to look for huge green candles aggressively and quickly towards your key level. That is what we call momentum. Momentum is basically speed of how fast price is moving. Alright, so we covered market divergence, we also covered momentum. We need to cover level 2 next. Alright, so right over here, this is level 2. This is the times in sales, this is the level 2. And just a quick short explanation, level 2 is pretty much the pending transactions, times in sales is the receipts. And what we want to be identifying when taking trades is these things that we call walls. Walls are huge chunks of orders that are put on either the ask or the bid side, meaning there's lots of liquidity behind the area we're watching, which is a good thing because if there's a lack of liquidity in a breakout, then we're probably just going to get a fake breakout and it might not even break out at all and you'll just get stopped out. So when we're looking at level 2, we're looking for two things mainly. We're looking for big orders like this, 220,800 shares, 175,200 shares. Like those are a lot of orders stacked up at 265, right? So like I said, times in sales is the receipt. Level 2 is the pending transactions. So we see the big wall over here on level 2. What we need to make sure is that 265 gets executed 175,000 plus 220,000 times on the times in sales. Once we see that, we get the confirmation that the stock is actually going to break out. Now, it's also going to be the same for the downside. If you're looking to play the downside for puts, you want to look for walls on the bid, and then you also want to see those orders being executed on the times in sales. One more thing I want to go over about level 2 is that you need to identify the momentum behind level 2, right? So for example, let's just say we're playing 330 calls on Tesla. Okay. This is the bid, this is the ask. So let's just say the ask, we're just going to forget about the share sizes for now, just to make this a little bit easier. But let's just say the ask is putting up 299.20. All right, and 330 is this area, and this is 299.20. Right? So the bid is probably going to be offering something like 10 cents, 299.10 to 299.20. So in order for the ask side to get actually executed, the bid needs to match the ask price, right? And this goes hand in hand with identifying momentum. So as the ask price keeps rising, let's just say it goes from 20 cents to 30 cents to 40 cents to 60 cents to 70 cents to 90 cents, and then it finally, boom, breaks out to 330. Sorry, quick little fix. I actually meant the 300 break over here, so pretend we're playing the 300 break. But anyways, continuing on. Like I said, fast, sharp incremental moves into the key level of 300. Now, when the ask is putting up higher and higher orders, and the bid is able to catch up with those orders, so when the ask is saying 299.20, and then it immediately jumps to 299.50, then there should be a jump from the bid to match the ask as well. So as long as the bid can continue meeting the ask price continuously, then there should be a super nice juicy breakout waiting for us at 300. Alright, so we covered how to read level 2 shortly and how you can use it as an entry criteria for your entries. This over here is the times and sales. Now this is something that looks normal for the times and sales. It's usually going to be green, 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 red, 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 green, 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 red, 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 red. You get the point. But basically what these red prints mean and these green prints mean is that green orders mean prices being executed at the ask price. Alright? Red means prices being executed at the bid price, so a price lower than the ask, right? So ideally, these are two examples of what you would like to see. So if you're playing the downside on for something like meta, you would want to see velocity, rapid prints of red prints on the times and sales, indicating that lots of people are executing their offers at the lowest price possible, which is the bid. And when you're watching the upside, you want to look for lots of green prints, which is showing you everybody is trying to get in on the highest price possible, which is the ask, right? So when you see several of the same color print in your direction, this is a very big green flag for you that you're on the right side of the momentum breakout. All right, so we covered level 2. We also covered times and sales. Now let's go over the last thing, which is going to be volume. Let's just go with something like Tesla, for example. Oh, wait, I don't even have the volume indicator. But right over here. So let's just say you want to play the upside on Tesla, right? So when we're playing the upside on Tesla, volume is important to us. When we're looking to trade the upside, ideally we want to see more than average volume on the green candles, right? So notice here how there's a big spike in volume on this green candle. This next candle over here, it has some above average volume. We get this pullback, and this is kind of a red flag because it's above average volume. Right, so when we're looking at this and we're ready to take calls up here at like 351, when we see this red candle pull back and there's a decent amount of volume behind it, it's kind of a red flag for us to stay away from the trade. As you can see, the next candle here, below average volume, green candle, below average volume candle on this small green candle here, below average volume on this candle, above average volume on this red candle, right? And only average volume on this green candle. You guys get the point, right? So notice how the sellers have quote unquote more activity in terms of volume, right? So when we're looking to play the 351 break, this isn't exactly giving us the best confirmation, right? So if you were to take the breakout here on the high day, you would have got stopped out. So a good example of what you would like to see when you're playing a breakout to the upside or even the downside is you want to see that the volume maintains above average or has sharp spikes that are in your favor, right? So if we wanted to play the low of day break here, you can see past couple candles, they're average. The second we actually break past low of day, there's an increase in volume. Second candle after the break of low day, more volume, right? This over here, this is a pullback candle. It's only average, so it's nothing you have to worry about. And then the next candle down is just average volume. So right over here, this is giving us great confirmations that Tesla just broke to the downside because the volume is in our favor. The only time where you would want to be paying attention to volume not working in your favor is when there's above average volume on candles that are going against your favor. Those are red flags that you need to stay away from. So yeah, guys, I just went through the entire checklist here for my entry criteria, and I hope you guys learned something from this video. And I hope you guys learn to apply it in your actual trading because it's going to be a game changer for you guys. I hope you guys enjoyed the video. Make sure to like, comment, and subscribe to the Stock Hours YouTube channel. And I'll see you guys in the next one. Peace.